What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is April 19th of 2021. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to dive straight into the conversation of what everyone is worried about at the moment, and that was yesterday's major sell-off in Bitcoin's price, as Bitcoin dropped from the $60,000 range down to $50,000. Now, I understand that this could cause for a lot of concern, but I want to cut straight to the chase about talking what caused it, how I'm holding my positions in the market, and outside of that as well, talk about two very critical things. Not everything is an absolute emergency in this market, guys. You don't have to panic about every single correction, and it really just takes some perspective of stepping back and realizing where we really are and how far we've come. And last but not least, I need to spend some time to talk about something I've echoed before, but it is very critical as there are a ton of new people coming in the crypto space about how you can simply take paper losses in the interim on your portfolio value versus losing it all, which is the most important point of this conversation. So let's go ahead and dive straight into it, guys. Let's go ahead and first talk about what caused this pullback. Well, a lot of people are going to point to a lot of different things, and I'm not usually one for pointing at, oh, this headline says this. But there really are two general things that have caused this kind of domino effect in price, right? For prices to go down. So first off here, we had this pretty much false allegation here of a post from FX Hedge, which is, bear in mind, originally a pretty well-respected source on Twitter, coming out and saying that the U.S. Treasury is set to charge several financial institutions for money laundering using cryptocurrencies, sources say. So first off, it's very obscure here to take a tweet, and you can see just kind of what traction this got here, guys. And crypto Twitter, this is pretty good traction. To not only just name no specific sources or articles, but outside of that as well, to make a claim that the U.S. Treasury Department is the one that would be charging multiple financial institutions for money laundering using crypto. First off, I just think the statement itself doesn't make sense. I don't think any major financial institutions, if we're talking about commercial banks that have a major weight on the world, they're not really using crypto to money launder. It's not really a great tool for it because everything's immutable. But outside of that as well, the U.S. Treasury Department doesn't really do this. From all my sources that I've seen, from people that I follow in the space, their general assumption is that the Department of Justice would be doing this, or the DOJ as it's commonly referred to as. And second off as well, we had another tweet here from FX Hedge that kind of came later on. Really, the story had broke out earlier, and this is an actual real fundamental story here, and that was the fact that the Bitcoin hash rate had dropped quite dramatically, over 45% in Xinjiang in this case, which is a major city in China where a lot of the mining operations go on. Now, again, as you have a massive drop in the hash rate, security for a short while is depleted to a decent degree. And it's not so much just the hash rate here, but the sheer fact here overall that when the hash rate drops, right, until there's a difficulty adjustment, right, you have a very bad issue here where not as much Bitcoin blocks can be mined. And we saw this the other day as transaction volume dropped dramatically on Bitcoin. So this means that the Bitcoin network, which is already pretty expensive and slow as is because there's a ton of transactions consuming up any bandwidth that's available, we now have an issue here where it's even stronger in this case, where it's even more harsh, where barely any transactions can get processed or the fees start to accelerate much higher, right? So again, this caused some panic here as we started to see here very clearly that there's a lot of centralization. But as mentioned here as well by FX Hedge, which I think is trying to redeem itself at this point, and they're suppressing people from being able to reply. I think that that's a terrible feature here. But again, some Twitter pages like to use it. I digress. One of the main things they mentioned that on-chain data, we could see that one of the major miners sold over 9,000 Bitcoins across the market. And that can cause some pretty substantial sell-side pressure, right? As people start to follow, right? You just need one single catalyst like that that can really drag down price with a mixture of FUD and fear. Now, all this right here is already kind of some explanation as to why we saw price do what it did. But even $9,000, 9,000 Bitcoins specifically, which is pretty sizable capital, even considering the fact that Bitcoin's hash rate dropped, and even considering the FUD and fake news in this case around, in this case that the Treasury Department is cracking down on companies. We don't know if this is true or not. Even with all of this, markets shouldn't have sold off as bad as they did. So what really happened? Well, what happened here is we had a record amount, as I tweeted out here on Twitter. If you guys want to follow me, Ken at Nicholas_Merton. There was over $8 billion of liquidations yesterday through leverage positions, margin traders, as they're commonly referred to as. These are individuals who are going out, and as we've echoed many times here on the channel, these are individuals who are going out, could be smaller traders, larger traders, who are going out with their positions on the market. And what they're doing is they're borrowing capital in order to increase their profit and possibly loss exposure, right? So the whole idea here is that if I, for example, go on a 5x leverage trade, I now have, basically 5 times the original capital I had, and I'm using it to buy a position in Bitcoin, Ethereum, or maybe go short. But in this case, we had a lot of people going long who were betting on the upward move in the market. So if Bitcoin were to go up 20%, I'd pretty much double my money because I have 5 times the exposure, right? Now, there's an important point to keep in mind here as well that many of you already probably know about, which is that it goes the opposite way. If Bitcoin goes down 20%, seeing as I have 5x the exposure, I'm using borrowed capital, I have what's known as a liquidation event, right? I have this event where I lose all of my underlying capital if Bitcoin goes down 20%, because at that point it has to cover for those I'm borrowing from, right? The lenders on these margin trading platforms. And what happened is there was over 1 million unique accounts, 1 million unique profiles that got liquidated yesterday in this trade, right? Basically, as price started to decline off of this news, 1 million people lost all of their underlying position. Now, it might have not been that they had all their capital in those single trades, but there was 1 million individuals who had margin positions that got fully liquidated. They lost that money, right? $8 billion in liquidations. Now, it is important to keep note, right, that with $8 billion in liquidations, this is not $8 billion in underlying positions, right? It is technically considering the leverage positions, right? But the underlying capital lost is probably not $8 billion. That all being realized, this is still a massive problem within crypto. And there's a couple reasons why it's a massive problem and how it exacerbated what we saw. And just to kind of showcase here before we dive into that, this is a comparison here going back into January 19th here. We had some pretty heightened days here. February 21st was a pretty big day for long liquidations. March 14th, when we had a pretty big pullback in the market. Right, we had a few days here and there. There's a couple hundred million, maybe up to $1 billion, $2 billion. This was over nearly $5 billion of Bitcoin liquidations. And if we expand it to the entire market here, we can see that there were over nearly $9.26 billion in liquidations. The biggest on record. We have never broken this in crypto market history, right? So again, a massive pullback here in the broader cryptocurrency market. And it's because of, look at all these things. I mean, these are all the platforms that are supplying, basically perpetual contracts, general leverage trading, whatever it may be. There's different forms you can gain access to leverage. But I digress here. You basically had this massive liquidation event where 1 million people lost it all with some of their positions, if not their entire portfolio. They're practically gambling at this point and being told that this is the way to get rich quick in cryptocurrency markets. Well, I'm going to go ahead and talk about 2 reasons why that's not true and why it's a problem, why leverage trading is becoming a growing problem. So the first problem here is that you're not going to likely get rich quick. Most people who leverage trade lose it all. It's like going into a casino, putting in $1,000 on the table for blackjack and walking away with nothing, right? That's what most people are going to end up on. There's maybe 5% that get lucky. Most of them don't, because they don't know how to properly manage the potential of liquidation, right? They don't know about refinancing on their leverage trades. And outside of this as well, generally speaking, most people are not good at going in and out of the market. Sorry, guys, I'm not here to insult you guys specifically, but it is a scientific fact when it comes to markets that most people either lose out trading or would do overwhelmingly better with longing their portfolio. And when you add margin to the equation, you are much more likely to lose money. It is why here on this channel, I do not talk about leverage trading platforms. I don't show referral links at the bottom of my description to platforms. They're gonna give you the opportunity to go along 50x or 100x, where if the price goes down 2% or 1%, you're going to lose it all. How could I sleep at night promoting something like that to you guys, right? Now, I for example, I'll be candid with you guys. I've given the benefit of the doubt, and I'm a big kind of like libertarian type in this case, where I want you to be able to go out and do what you want. And I do believe that at the end of the day, it shouldn't per se be illegal to offer leverage in crypto markets. That's not the case I'm making. The case I'm making is that there's a lack in correlation of education when it comes to this. And the bigger problem here that I was referencing to, that's really the first part here that most people are going to lose in it. It's almost nearly criminal, as I mentioned down here, in my opinion, to offer 50, 100x leverage in crypto markets. It's already enough to offer that in 4x and more stable markets. The important factor here we need to keep in mind is that it does lead to a disparity in price discovery. Whereas a lot of that liquidity would be going into spot exchanges like Coinbase, Bitstamp, Binance, Kraken, you name it, right? When it would normally be going into the order book, adding more depth, adding more volume, and actually probably more price appreciation for Bitcoin, it's going into a derivative-based market that's trading off of the underlying price on spot markets. And that leads to a couple thousand Bitcoin, like mentioned here within this tweet, right? 9,000 Bitcoin to be sold off. This can lead towards really substantial declines because the order books are all over on derivatives platforms, right? So again, this is a really substantial problem in the long term, and it's been affecting crypto for some time. But anyways, as I've talked about those two kind of problems here, right? You guys kind of get the case here. I don't want to ramble on about, oh, leverage is evil, yada, yada. It's a tool. If you know how to use it properly, it can be valuable. But at the same time, when a market is over leveraged like it is, it can become a major pain point and actually lead to anomalies in the market that can leave people losing everything. When in reality, Bitcoin is starting to recover up a decent amount of this sell-off, right? What was mainly lost in this hourly candle from $59,000 down to $51,500 on Bitcoin's price, we've regained most of it. We're just 2K below that price range, generally speaking. It would have sucked if you got caught in that vortex and lost it all. People who are actually just spot trading or investing, they're just down a little bit from the previous all-time highs, right? Now, let's go ahead and talk about the price action here. I know a lot of you guys are like, okay, Nick, we get it. Stop spieling about, how evil leverage trading is and how there's fun in the market. Where are you positioned, right? And you guys, I think that's completely fair if you want to know that. I haven't really changed my positions in the market. Actually, I haven't traded ever since this pullback came in. Right? The only thing I did recently in this case, just for a bit of transparency, is actually before this sell-off came through, I actually added a little bit of my Litecoin position. So one of the alerts we sent throughout the Dash report. Right? So in this case, I'd reallocated some positions I had in the market, but ever since this sell-off has happened, I haven't adjusted a damn thing. Okay? So if you guys want to know that comfort of me, either adding more to the market, leaving the market, I'm actually quite neutral. I haven't changed anything. But this chart, which is what most people are probably watching, which is the hourly chart where each candle represents an hour, or the 5-minute chart where it makes this sell-off look ultra dramatic and leaves you with reason to panic. All of these things, right, might cause some concern, but they're not the charts that you should be watching. What we should be watching here to get a rational assumption of where we are and try to get some insights from the market is the daily chart, if not later, right? Weekly charts, monthly charts, right? Let's take a look here at the daily. It's something we've been talking about for practically a month now. I think we've been talking about it well back into March. But even over the last few weeks, you guys will recall that we've talked about this kind of declining momentum line here that Bitcoin has been following, where we've had ups and downs against it, right? Price has been swinging around here. We've been setting in higher lows, higher highs. But the important thing that we've noted is that, and why we can draw this line of momentum here where it's flattening out, is because the highs are getting closer and closer. They're not as distant as they were from here to here or back here to here, right? The significant highs in price. Take a look here as well at the lows, right? Getting closer and closer and closer and almost kind of plateauing out just like those highs. And notice I'm not using any crazy indicators here. I'm not using the Fibonacci's. I'm not using I'm not using any, even just things like simple moving averages or the MACD. What I'm looking here is what price is telling us on the daily chart. And what we can clearly see here is that the momentum is stagnating here. And honestly, it's not much of a surprise here, guys, because as we've talked about, I think back a couple of videos ago, right? We'll go ahead and just kind of get here to the monthly chart, right? If we take a look at the long-term chart here, sorry, I got some percentage lines here. I think we talked about in a previous video that we're basically getting close up to the line of resistance here. And to think that, those, for example, corporate treasurers that are looking at Bitcoin as a treasury reserve asset aren't learning about these things and realizing that we might be a little bit overextended in the interim when it comes to Bitcoin's price, that they're just going to come in and buy. I don't think that's the case. Right? I think that there's going to be a period of time where we pull back in the market, similar to back here in June of 2019. We pull back a little bit. We have a cool down in the market where, again, I think there is possibly still room for some altcoins to pop up as the liquidity starts to circulate. But eventually that altcoin cycle will fade and altcoins will come down with Bitcoin, right? And eventually we break back up, and we will eventually probably break this line of resistance, right? We'll do for a first time in history, we'll possibly break through. But I don't see that momentum here, guys. I really don't, right? We're starting to see it very clearly fade on these longer term time frames, right? The momentum's starting to stagnate, and the sell-off is getting a little bit more harsh, right? Just take a look at the volume profile here on Bitstamp, which is a well-regulated, trustworthy exchange in the sense of its volume. You can see that volume not only has been going down, but any kind of significant days are sell side candles since back here in February. There haven't been any major buy waves in the market, right? So this is a cause for concern here. And the way that I would say to look at this is generally, if we start to, for example, come up here and we set in a lower high than what we set back here, if we can't break above those previous highs and we start to roll over again, that's probably a cause to be concerned that we might be getting a substantial pullback in the market, where I'd either want to be positioned in the altcoins that are going to start to capture some of that liquidity in the interim in a short-term time frame, or I'd want to possibly consider being in cash. Now, one thing that I have drilled before in the past is that usually it's not good to trade these intra-cycle corrections, right? These kind of 30% corrections, 40% corrections, it's not really worth it. But what can be worth it in this case is if, for example, we start to really roll over and have a period of time like we did here in 2019 where things just simply go quiet for a while, right? That might be a position where if you're an active trader and you're trying to capture opportunity and growth, if you've already been trading a little bit in the market and you're not worried about the potential tax implications of taking short-term capital gains, yeah, it might be good to take your liquidity elsewhere and go do whatever you want with it, right? Who knows? Depends on what you want to do as a trader. I'm not here to determine that. Now, one other thing that I want to mention as well is that we've seen a total increase of 200%, basically 3x here in the market valuation from the all-time peak previously back in January 2018, right? We peaked at around $761 billion, peaked out over here around nearly 2.3 trillion, almost a 200% increase here from there to there, right? And now, and you can see actually if I kind of highlight it, probably you can see the actual red candle there in the chart, that big wicks here, right, on either end, peaking out around 2.3 trillion. Now we might be setting up here to take, to kind of catch back into the more realistic time frame that we had here of the expanding cycles, where Bitcoin and total market cap as a whole would peak out here around, I think, $9 trillion or $10 trillion, somewhere around here later in 2023, right? We've had a really great rally so far, guys. I mean, just imagine back in September, a good chunk of you were here in September, we were at $300 billion in total cryptocurrency market cap, and now we're at $2 trillion. I mean, this really is not anything to panic over, in my opinion. In fact, market cap, broadly speaking, is right where it was back here on the week of early April. We can't let ourselves get greedy, guys. We got to be smart and diligent. Sometimes it's not a bad period of time to take profits. If you feel like this market volatility is something you can't handle and you made a great return so far, you can feel free to take profits if you want. And vice versa, if you realize historically that you're probably not good at timing the market, I'm not saying you guys aren't, but I'm saying if you feel personally that if you would have tried to trade the market, you wouldn't do well, and you want to focus on building your cash flow and averaging it on the dips, hey, that could be a great position for many of you out there. It's probably the best for most people. Right? But the big takeaways here that I want to project is that we can't treat everything as if it's a doomsday scenario for Bitcoin. We can't allow things like margin trading to continue seeping through the space and causing such destruction that inevitably exacerbates prices, as people in this case have automatic liquidations, right? When they borrow at too high of a price in crypto through, crypto lending platforms, or they're taking too much of a position when it comes to leverage trading platforms, right? All these things can cause a domino effect here and really start to make crypto more like a casino, especially when it involves high leverage profiles of 50 to 100x. Platforms who are doing this honestly should be ashamed of themselves, in my opinion. Sure, you can make the argument, it's what the market wants, right? Surely the market wants it. But sure, there's definitely some people in the crypto space who know what kind of risk they're taking on. They know what 50, 100x leverage is. They know that there's many other opportunities, but they personally want to go all in on that. But there's a lot of people in this space who are promoting leverage platforms. And mind you, people who are respected in this space, who are going out and promoting leverage trading platforms and not teaching people how to diligently use leverage. To use anything, and just if you want my take on it, using anything above maybe 2 to 3x leverage in crypto is absolutely insane. Using some of these profiles of 50x leverage in 4x markets is already a heyday. It's already crazy, right? Imagine using that in a market where an asset like Bitcoin can increase, decrease 10, 20% in a single 24-hour candle. Anything towards 5 to 10x or more leverage is asking for complete disaster, in my opinion. So I'm sorry, guys, I get really heated up about this because, one thing that really kind of grinds my gears is that crypto is supposed to be an asset class that helps a forgotten generation, in this case, millennials and Gen Z, when it comes to finance, a forgotten generation of individuals who were left behind by traditional finance and the traditional economic system, and they grew up into a period of 2 global recessions, right? They have little to nothing to their name. And now the one asset class that can save people, the one industry that was built to help uplift people who probably needed it most, now they're being robbed of it simply due to misinformation, education, and faulty promotion by a lot of people in this space. But everyone's going to do what they're going to do, right? I guess there's, clearly in this case, there's room for speculation in the crypto market. And unfortunately, sometimes there's going to have to be people who promote the more speculative end of the space. So apologies for being a bit opinionated, guys. I just like to think at the end of the day that when I talk about something, when I promote something in this case, whether it's a sponsor in this channel, whether it's a project that I genuinely like, all of that is stuff that I genuinely back or at least respect to a degree. And I have a line in the sand that I draw personally, right? So I'm not going to come here screaming every day telling you that the world is ending because Bitcoin dipped. I'm going to come and bring that legitimate analysis, looking at the longer term time frames. I'm going to come to you guys and promote real platforms that have real track records that are going to help you become a trader, a better trader or investor at the end of the day, and hopefully be able to beat out the market, right? And if not, average in and ride the wave of the market, do the ups and downs. So anyways, guys, that's it for my rambling today. If you enjoyed this video, drop a like. If you know someone who needs to hear this, share it with a family or friend member. We have to get the word out here, guys. There's too much noise in this space. There's too much noise and, unfortunately, too much destruction because of that noise. So, anyways, that's it for today's video, guys. Have a wonderful one. And I just want to say again, if you ended up being on, whether you're a spot holder and you're down, guys, in your portfolios, and maybe, for example, you got caught in that storm of 1 million people getting liquidated, there's always a brighter end on the horizon. There's another day, and it's time to learn from those mistakes and become a better investor and trader. And hopefully I can help you guys in that journey, as well as a variety of other people in the cryptocurrency space. I'll see you guys in the next video. Take care, everyone.